Welcome to the Friday Five with Steve Greenfield on CBT News.
Welcome to this week's Friday Five, where we recap the last week's automotive technology deals. This is Steve Greenfield from Automotive Ventures, and thanks for joining us. Deal making has really accelerated over the last part of the year, so let's dig in and review what happened this past week. Let's start by looking at the markets. U.S. stocks had a banner November, at one point pushing the Dow Jones Industrial Average over 30,000 for the first time, and giving the Dow its best month in over 33 years, as investors cheered the prospect of COVID-19 vaccines, halting the pandemic, and the possibility of fresh stimulus spending to bolster the economy. The bull run has put the Dow up 62% from its March low, when the U.S. Federal Reserve ended a panic that wiped out trillions of dollars in investments by outlining a plan to counter the pandemic's economic stress. Among the big reasons for climbing stock prices is investors' optimism about the strength of the economic recovery in the years ahead. While recent data show economic growth slowing and consumer confidence flagging, markets are forward-looking and betting the recovery will gain steam, particularly with COVID-19 vaccines on the horizon. Let's get to this week's automotive technology transactions. November saw some sizable deals in the M&A space, and we are likely to see a couple of other big ones announced before the end of the year. This week, S&P Global agreed to acquire IHS Markit for $44 billion, the largest merger of the year. S&P traces its roots to an 1860 compendium of information for railroad investors and is best known for its bond ratings and its iconic stock market indexes, which serve as shorthand for the health of global markets. IHS Markit, formed in 2016 by the merger of two smaller players, tracks millions of data points in financial markets, but also has the Carfax, Polk Automotive data, and Automotive Mastermind brands. In 2016, IHS merged with Markit, and the two companies had a combined market value of about $13 billion. Today, IHS Markit is nearly 3 times as valuable, a sign of how hot the market is for financial data. November saw a second large deal, with CDK Global announcing the sale of their CDK International business segment to Francisco Partners for $1.5 billion, representing approximately 15 times adjusted EBITDA, which includes expenses for the standalone business. CDK's international business has historically underperformed their core and was a distraction for the company, who derives most of their $2 billion in revenue from the North American market. During CDK Global's latest earnings call, they signaled that they'd be looking at making acquisitions in the short term. The sale of their international business will give them a war chest to go hunting for M&A targets. Last month, TrueCar completed the sale of ALG to JD Power for $135 million. This puts approximately $275 million of cash on TrueCar's balance sheet, which equates to almost $3 per share in cash. We'll be eager to see what TrueCar decides to do with the cash beyond buying back shares. Hertz has announced plans to sell its Donlen Fleet Leasing and Management subsidiary. Hertz has entered into a stock and asset purchase agreement with Athene Holding, a financial services company. With adjustments for fleet equity, working cap, and assumed debt, Hertz Global expects the deal to bring a purchase price of at least $875 million. Hertz Global filed for Chapter 11 bankruptcy in May under $19 billion in debt. Digital automotive insurance platform Metromile will go public via Special Purpose Acquisition Corporation, or SPAC. Metromile is reimagining insurance to make it fairer and actually delightful for the consumer. The deal, expected to be worth $1.3 billion in combined company market cap, includes a $160 million commitment led by Social Capital, Miller Value Partners, ClearBridge Investments, Hudson Structured Capital Management, Mark Cuban, and New Enterprise Associates. We continue to highlight interesting companies in the automotive technology space to keep an eye on. If you read my monthly newsletter, I showcase a few companies each month, and we take the opportunity here on the Friday Five to share some of those companies each week with you. Today, we'll look at two very interesting automotive technology companies, Understory and CarOffer. Our first company to watch, Understory, was founded in 2012 in Madison, Wisconsin by co-founders Alex Kubasik, Alexander Jacobs, and Brian Dow. Understory is a weather, infrastructure, and analytics company that detects rain, hail, wind, and other weather events directly at the Earth's surface, where the risk to life and property is greatest. Understory builds and operates weather networks that are comprised of patented RTI weather stations, which are full-stack, rugged, tamper-proof, maintenance-free, precision weather solutions. The stations measure at 50,000 times a second and power a cloud-based artificial intelligence core that stitches the measurements together to provide an unprecedented understanding of weather events. These weather networks have completely wireless data transmission and provide research-grade hail, wind, rainfall, temperature, humidity, and growing degree unit accuracy at a fraction of the cost other solutions on the market. Understory's technology has been perfected for worldwide deployment and is poised to radically change the way weather is understood globally. Climate-vulnerable businesses like automakers and dealerships rely on Understory's parametric insurance for financial protection from hail damage. Businesses can manage severe weather risk with simple, transparent, flexible insurance coverage. Our second company to watch is CarOffer, founded in 2019 by serial automotive technology entrepreneur Bruce Thompson and located in Dallas, Texas. CarOffer is an instant wholesale vehicle trading platform that provides a real-time live bidding online auction services. CarOffer has over 1.5 million vehicles available for dealers to purchase and premium offers at the point of vehicle appraisal within 2 to 5 seconds. Dealers can double the number of vehicles traded in every month at 150% higher average profit. The value propositions to dealers are instant buy offers on every appraisal, which provides an immediate exit strategy, and buy offers average $1,000 to $2,000 above auction prices, guaranteed 45-day buy offers that lock in the offers on retailable trades and aging inventory, daily inventory buy offers, which allow dealers to get aggressive offers daily on all used inventory on their lots, and the ability to pre-order used vehicles at a lower acquisition cost. So that's your weekly Friday 5, a quick wrap-up of the big deals in the automotive technology over the past week. Let's go back to that. So that's your weekly Friday 5, a quick wrap-up of the big deals in automotive technology over the past week. It's an exciting time to be in the automotive space. Make sure you stay tuned in each week to stay up to date on the industry's technology M&A activity. I'll keep my fingers on the pulse of deals being done, so tune in each week so I can share updates with you. Please feel free to reach out and contact me anytime. I always look forward to catching up to discuss the industry. Thanks for tuning in to CBT News for this week's Friday 5, and we'll see you next week.
Thanks for joining us for another edition of the Friday 5 with your host, Steve Greenfield.